The purpose of this video is to cover all aspects of petty cash in accounting. So let's get started. What is petty cash? Well, simply defined, it is an amount of cash kept on hand to pay for minor expenditures that may occur within a business. The petty cash fund amount varies across different companies, however, has three main functions. This includes establishing the fund, making payments from the fund, and replenishing the fund. The first function is establishing the fund, which involves writing a check for the amount of fund, cashing the check, and placing it under care of an employee. A journal entry is made to record the establishment as follows. For example, Syed Industries cashes a $200 check to establish a petty cash fund and gives the cash to Ryan as the custodian. Syed Industries records the following entry. From this entry, we can extrapolate that an increase in petty cash means a decrease in cash. There are no changes in total assets, and the $200 is designated to be used in the fund. The second function involves making payments from the fund, which usually involves one of two ways to pay for qualifying expenditures. First, the cash can be directly taken from the fund to make a payment, or employees can seek reimbursement from the fund if they paid for it personally. The third function is replenishing the fund, which involves bringing the remaining cash in the fund after expenditures have been paid to its original balance. This is done through the company cashing a check, and the receipts in the fund are used as proof of expenses. For example, when a petty cash fund is replenished, the amount of cash needed for replenishment should always equal the total amount of receipts. However, in this report, there has been an error as the custodian may not have attained all the receipts correctly, and thus there is a discrepancy. This discrepancy is charged to an account called cash over and short, which can have either a debit or credit balance depending on the circumstance. Referring back to the report, it can be seen that there is a $2 discrepancy, and thus goes to the cash over and short account as follows. In this example, the cash over and short account has been debited, which indicates an increase in expenses. This balance would most likely be recorded as a miscellaneous expense. Thus, the three components of petty cash have been encompassed, showing how to establish the fund, making payments from the fund, and replenish the fund, including with errors.